All right, I think we can get started.
Let's
Hello,
do it.
everyone. Hope everyone is well. My name is Joseph Alam. I'm the general manager of Pripco Blocks. I'm joined here by Damien. I'll let you introduce yourself.
Hello, everyone. It's my first webinar with Pripco, so very excited. My name is Damien. I am the COO at Pripco. I've been in Dubai for about 10 years, and I actually joined Pripco last month. So we're going to talk a lot about timing in this deck, timing of investments. That was great timing to join Pripco. That said, I'm really excited to be here. I think it's in the challenging moments that you create the best experiences for your customers. So happy to be here. Hopefully, we're going to be able to give you a little bit of answers on the questions you might have. Don't expect all the answers though. But let's see with Joe what we're going to talk about today.
Amazing. Thanks, Damian. And happy to have you also on board with us and the company. So as Damian hinted, there's obviously a lot of questions that you guys have, specifically in these unprecedented times here in the country. But what we're going to be focused on today is to understand what investors can have, or how can they take control of their investment during these unprecedented times, or any uncertainty in general, whether investing in real estate specifically or any type of asset class. But first, we want to take a step back and understand how an investor usually behaves during these times. What is the psychologically or the psychology behind the investor mentality when it comes to investing during, let's say, turbulent periods. And in the context of real estate, then we're going to tackle how real estate behaves during these times and over a specific timeline that we have placed for you. And then we're going to go deep down into a few strategies which we would recommend to our customers, and how they can essentially use them to their own benefit and always take control of their finances and their investments during uncertain times. And then finally, we'd love to share with you a new investment strategy which we're launching next Monday on Pripco Blocks, and we're opening up at the end the session for any Q&A. Please feel free to drop your questions at the bottom of the screen. You're going to find the Q&A section, which you can drop your question. It can be anonymous, and it also can be non-anonymous if you'd like as well. And all the session is recorded. It's currently live on YouTube. So if anyone has missed a specific part about the session, feel free always to go back to YouTube, and you can check it over there. And obviously, you can always reach out to us at any point in time after this webinar as well. We're happy to take any question that you guys have. So without further ado, I'd love to pass it on to you, Damien. Take us through the role of the investor psychology.
All right. So first, let's start with what everybody has seen and agrees on over the past 18 days of this conflict. Thank you very much for joining. I think we've all been binging on the same headlines. We've seen the strikes. We've seen the volatility in the oil price. We've seen questions about the Strait of Hormuz. Like a lot of things are very, very uncertain. And today we want to focus on what we know and what are the ways to act that are the right ways to act when things are uncertain. The first thing, obviously, is foundations in Dubai are really strong, and I think that's something that we've heard a lot around the past 18 days. It is still true. We're live today from Dubai. The weather is glorious, but aside from that, the market is still intact, which means the transactions are still going through. The developers are still delivering. The banks are still lending. All the regulatory, the government agencies are still working. Those things haven't changed, right? So the structural pillars of what made Dubai 20 days ago are still here. Nothing has been damaged. Now, on the second point, there's obviously no impact on the market fundamentals, because what was driving the market before, which was demographics, which was attractivity, hasn't changed either, and it's going to bounce back. So all of this means that coming from a position of force, what we know is that despite the fact that there is a sentiment shock, a psychological shock, this is not a structural shock like we could have seen in some of the other crises. So this is, for lack of a better word, something that is more psychological than structural. And if everything else is intact, what we see is that at the end of the day, people are just in wait and see mode. So both the buyers that we talk to and we see, and the sellers that we talk to and we see, want to wait and see what happens. which means, if you think about it, that there is a very strong belief in the long-term potential of the markets, right? Because the buyers and the sellers are looking, the buyers are looking for deals, the sellers don't want to sell at a discount, which means that they both believe in the long-term recovery. Now, the only thing that's certain in this market is that no one can predict when it ends or how long it's going to take. But that's the whole point. And what we want to touch on today is, one, when the markets are uncertain, how do people react? Because they do act in a predictable way, even though the market is uncertain. And two, as a savvy investor, what are the strategies that you can put in place today to act in the most rational way when everything else is irrational? And so that's what we're going to cover now, right? Why the topic of psychology or behavior of investors matters so much. Well, the argument is very important, right? In normal market conditions, investors, markets, whether they are, from retail to institutional, they rely on fundamentals, metrics. They rely on things that are really hard science. But as soon as they're in a lot of uncertainty, then I would say that our amygdala kicks in, and the prefrontal cortex is completely left on the side. We stop being rational and we let emotions drive us, right? So we have big headlines, and obviously the headlines are, very vivid, very intense, especially when things that are so unexpected as what just happened in the region. So we want to reassess, meaning that people all of a sudden throw a little bit their principles by the window and start changing the way they think about it. And the first consequences of all of that is obviously when emotions are on override, everything else is delayed because people don't manage to zero in. They're not using their usual frameworks for decision. They're trying to come up to new decision-making processes. And at the end of the day, the capital is sitting on the timelines, right? So the most important point here is we are in a situation right now where psychology drives the markets more than the fundamentals, the underlying quality of what the market represents actually do. And this is a very important point because we are in the beginning of this phase. So let's understand a bit more, if we go to the next slide, why people who are rational, people who are sometimes professional investors, people who are, very wary of how to manage their money in the best possible way, start behaving like this. It's actually 3 cognitive biases that are very well documented in research, and especially in the field of behavioral finance that was pioneered by a lot of people, but especially Daniel Kahneman, that you probably know. He wrote Thinking Fast and Slow, which is one of the foundational book on cognitive biases and how the brains work and how we have those 2 systems. So the prefrontal cortex, which is the decision-making process, all the rational side, all the complex tasks, and then what we call the reptilian brain, that is, the reaction, the thing that has been in us since 100,000 years, that have been the results of human development, and that doesn't give us the choice, that always thinks about threats and fight or flight. And basically, when we are in a crisis mode like this, the fight or flight brain obviously takes over the prefrontal cortex. So the 3 main biases that are always the same in this kind of situation. The first one is loss aversion. And loss aversion has been demonstrated with research and with experiences in the 70s and the 80s. People will basically, and it's always obviously in simplification, they will think that losing an amount is twice as worse as it is good to gain it, right? So they will always be more averse to loss than to either a potential gain or a missed opportunity, which is why people that are in the market currently, even if they're positive on their investments, might be tempted to say, like, I'd rather exit rather than lose something because I'm more averse to losing than staying in, even if there is a potential for gain. And this is really something that has driven a lot of the behavior in all the crises, whether they are financial, geopolitical, or even like the pandemic. That means that also another cognitive bias that is really important is the recency bias. Basically, the brain remembers more vividly what is recent, especially if it's something that was intense to begin with. So right now, at the moment, if you look at the headlines, they're all extremely, extremely intense and of course recent. So people who have been exposed to those headlines will take them in account much more in the decision-making process than the 5 years that we've just known of extremely strong fundamentals, regular growth, and everything that was extremely solid. So even professionals, even hedge funds manager, even those people have the cognitive bias. The point of a cognitive bias is that you cannot, get rid of it. You can only learn to recognize it and try to work around it. But this is the second point that really explains why people will react this way. And the third one, that's, I would say, the most important, and that has driven a lot of the very strange behaviors, especially in retail investments in the past decade, is herd behavior. Obviously, when people don't know what to do, I think the first safe option is to say, I will wait, because that feels like the safest, rather than making a decision where I'm active in making a decision. The second thing that feels the safest is to do like everyone else. And you've probably seen that already in your circles, where people are like, what do? We don't know. The second someone says, okay, I've made a decision, I'm doing this, it will trigger a lot of other people following the same behavior. And obviously, when this happens in financial crisis, or when this happens in the markets, that's what driving very large sales. That's what driving the bank runs. That's what driving a lot of very, at the end of the negative behavior. And obviously, the smart money doesn't move and doesn't follow the herd behaviors. It doesn't mean that you always need to be exactly contracyclic, but at least you need to make sure that you're not driven just by imitating the others without any logic, in the back end. So basically, those three psychological drivers, which are cognitive biases, they influence the most, when most of the investors, they enter or they exit the market, which definitely is not what you need to do if you want to optimize your investments, because that, drive people mostly to exit at the bottoms and buy at the tops, because that's when the recency bias and the herd behavior is the strongest. So if we move on to the next slide, we're now going to see the impact of those behavior, if you put them all together, on what the market actually does. So because of everything that we've said before, the 4 stages of what we see in uncertain markets is, first, the fear increases. And that came very fast this time around. Sometimes it's a little bit more of a build-up, but basically the fear takes place and we switch from rational, fundamental to something that is more emotionally driven. Second, people wait, and we are in this waiting pattern, holding pattern like we are today. People wait for clarity. Right now, we are deep in the middle of phase 2, right? So we've seen 1, we're in the middle of 2. And what happens then is that at some point, the markets begin recovering. But what really matters is the market always recover faster than what the general sentiment says. And the reason for this is that, you have people who are manage to stay rational in these uncertain times. You have people that are obviously have a lot more means of analysis and a lot more capacity to take risks. And by the time, basically the confidence returns, it's already priced in by the smart money and by the people who have made this move faster. So the point here is not to say you should rush into your decisions, but the point is, if you say waiting is my safest option, actually waiting is one of the riskiest and the costliest option. Because by the time the general populations feel comfortable going back there, you've lost most of the upside. And even if it's not the upside, you've lost most of the time on which you could have been invested. And as you know, the best moment to invest is now, because the time in the market really matters. So the main point on this is you shouldn't wait until everybody feels comfortable again, because by the time it does, then the most of the opportunity is completely gone. So if we move on to slide 8, just as a recap, we'll see, right, why timing the market is difficult and why nobody should try to do it. You will want to wait for clear signals, to safer conditions, to better visibility. Those things will not happen, anytime soon. We don't know exactly when it will, but what's for sure is in every single crisis, the recovery precedes the clear signals, precedes the safer conditions, precedes the better visibility. And so what people should need to try is to continue as they were doing before, and also move early so that you are part of the recovery when you're there. How to move early, that's what Joseph will explain in the second part, but we want to make sure that it's clear that waiting and just listening to either of the 3 cognitive biases that we've touched on are really not the right way to do. Once again, waiting is more risky than actually making actions and following a precise strategy. And we just wanted to take a few examples in the next slide regarding other crises. Obviously, nothing really compares to what we're currently living in Dubai. But what matters is that in every of those, let's say, shocks, there is always the same pattern of recovery. I think they all have the same pattern. Obviously, the timelines varies a lot. Obviously, the nature of the crisis can have an impact. We've seen a lot of regional conflicts around the world, and especially here. And there's been a lot of conflicts in history since. If we just look at the last 50 years, even here in the region, well, there's been some very big shocks and surprises. The same kind of actual, events happening that we're going on today. We don't want to draw any comparative there, but every time you see that beyond the shock, that can be obviously reflected in the price of oil, in the price of local real estate, in the price of commodities that are impacted by those conflicts. Like every time there's always a strong shock where everybody reacts out of fear, that drives the price, strong upwards or downwards, obviously. And then you see that the markets actually recover faster than what people would have believed in the beginning. It was the same for the global financial crisis. The drop was pretty massive. At the end of the day, even after I think a drop of 50 to 60% in the Dubai market, if people entered before everybody was feeling good, right when everybody was mentioning that the Dubai dream was dead and that finally this bubble exploded. Obviously, by 2010, 2011, it was fully recovered, and then we know what the shape of the curve was in the following 20 years. Sorry, it was the same for the pandemic. A lot of people mentioned that real estate everywhere would be in for a massive shock, and for a long time, obviously, it was really hard to not only travel but also just sometimes do viewings. And once again, there's been a lot of very negative predictions for the Dubai market. And then, right after that, and before any other city in the world, there was the biggest rally in Dubai history that everybody knows here. The point is really, let's learn to differentiate a sentiment shock versus a structural shock. And today is definitely the former, because we see that everything that's structural in Dubai is as strong as it was 20 days ago. So let's just remember, we're talking about real estate, one of the safest assets and the largest asset class on earth, obviously. And real estate has always been driven by long-term foundations and not headlines. And this is what we want to provide. We want to provide access to an asset class that is safe, that is long-term, that is yield generating, and that will provide in the long run return on the capital. And I think that's, if we look at history to understand, what we know is that it will recover. What we know is that what we're currently living is totally normal. The behavior of the people, the wait and see, the market being a bit tense and not continuing as before. What we know also for sure is that the recovery is coming. And so in the next slide, we'll look at how strong the Dubai market was before, because it's also another key point is we entered this phase in from a position of really historic strengths. And those numbers that most of the people will know here, we've recorded in Dubai in 2025 more than 200,000 residential transactions. And the total value of those transactions were about 917 billion dirhams. If you think about it and about the growth over the past 5 years, like you are witnessing a pace of growth, a trajectory that will not be stopped by something even as significant as the current crisis we're living. So coming from such a position of strength, we can confidently say that if you compare to all the biggest shocks that we mentioned in the previous slide, the recovery should be faster. Are we certain of this? No. Can we predict exactly when? Absolutely not. So what should we do if we don't want to sit on the sidelines, if we don't want to be part of this herd mentality, and if we believe not only in the position of historic strengths of the Dubai markets, but of the fact that the fundamentals are still strong? What should we do? And that's what we're going to try to explain. Joseph will tell you on what are the strategies that make sense in those times.
Thanks, Damien. Very well put together, honestly. And there's a lot of stuff that obviously investors can do to take control over their investment strategies and their finances, and focus more on that and less on the noise and all the stuff that are essentially out of the control, right? And one of the most important thing when it comes to investing, whether it's for you investing in real estate or any different types of asset class, or if you have any financial goal in mind, it's to be systematic and disciplined about it. And if you want to reach any investment goal that you want, whether buying a house, buying a car, even planning for a trip ahead of time, let's say in 3 months down the line, In order for you to do that, you need to be systematic, which means every single month, week, day, the frequency that you decide, you have to commit to an amount which you want to invest in, and discipline means that you cannot break that cycle. And it's actually the same the same mentality or strategy that you need to have in any habit that you're trying to build for yourself. And investing is just another habit that you can build for yourself for your better future. Now, one investment strategy that is most commonly used across the globe and usually used in situations or with investors that are long-term investors is called dollar cost averaging. And dollar cost averaging means investing over a certain period of time gradually at different price points in a specific, let's say, asset class or portfolio. So instead of putting all your money today, what you can do is put a small investment right now, and then another one in 2 weeks, and another one in another 2 weeks. And that's essentially being systematic and being disciplined, while dollar cost averaging, putting or exposing yourself to multiple price points on that investment chart and essentially averaging out all the different price points. And what this allows you to do is essentially forget about the ups and downs of the market, because this is something that you cannot control. And timing the market, as Damien has also mentioned, is extremely difficult. So one way to take control over that is actually to reduce the noise as much as possible, cancel it, and then keep investing gradually over a period of time which you've selected in a consistent manner. And this is the best way for you actually to make the most out of your returns down the line. So that's an investment strategy that I definitely recommend you doing. And I also recommend you starting immediately, because there is no point waiting for the better time to invest. You cannot predict when is going to be the bottom of any investment or any asset class. That's completely impossible to do. And today is the youngest that you can ever be. And if you want to invest for the long run, the best way to do that is to start as earlier as possible, because there is something called compound interest, which is earning interest on top of the interest every single time you keep investing. That's going to be into your benefit. And Albert Einstein said this quote that I love, that compound interest is the eighth wonder of the world. Who understands it earns it, and who doesn't pays it. Which means that if you use compound interest to your own benefit, you're only going to keep making more money and money down the line. But if you don't, and if you have debt, for example, and you're not paying your debt on time, and you're not participating essentially in investing in general, you're actually going to start paying that, because also compound interest and interest accumulates even if it's debt. So put it to your advantage, start invest as early as possible. And again, today is the youngest that you can ever be. Another strategy, which is very, very important, and you've heard this multiple times, do not put your eggs in one basket, and that's diversification. It's extremely important because putting all your exposure on one particular asset class can be very, very risky. And whether investing in real estate or different types of asset class is the same mentality. So if we want to take, let's say, the stock market, just for an example right now, how to diversify in the stock market is to actually look at different geographies, look at different sectors in that stock that you're buying, as well as different strategies that you can be exposed to in that particular stock market. So US stocks, European stocks, Asian stocks, or if you want to look at healthcare, you want to look at tech, you want to look at the environment. So there's multiple types of exposure that you can get into. And in the context of real estate, that's exactly the same concept. And what we're doing here at PripcoBlocks is the main focus of PripcoBlocks actually is to offer that diversification on the particular asset, which is real estate. So what you can do is, instead of investing in one particular unit that you want to invest in, let's say $1 million dirhams towards that unit, you can take that $1 million dirhams and invest it towards 20, 30, 40, 50 plus properties, as much as you want, because the minimum investment is as low as 2,000 dirhams. And that gives you the ability to reduce your exposure, reduce your entry barriers, and expose yourself to many different assets at the same time. And so you're able to do that from a location perspective. So whether it's downtown, Business Bay, JBC, Marina, it doesn't matter. And also by property type, whether it's a studio or one bedroom or even larger residential unit. So that's the ability that you have currently on the platform, and we have multiple properties currently listed there that you can obviously take the better use of them and invest in all of them. And obviously, we keep replenishing the inventory with new properties coming up every week, and I'll also announce that shortly what we're planning on doing. And then number three, which is also a very important strategy, specifically during uncertain times or during volatile times, is to look for an asset class that can generate income for you. And that could be real estate, that could be also a bond, that could be a fixed income, right? So these type of asset classes can pay out dividend or rental income in the case of real estate, and you are securing another source of income other than the equity that you're putting aside for yourself in that investment. You're securing a cash flow on a monthly basis in order for you to utilize it, whether to reinvest it in that same investment and compound over it, or utilize it for your own self. So you withdraw it and then cash it out and then spend it, right? So, and in the case specifically of Pripco blocks or real estate here in Dubai, as we can see in the graph, the rental yield, and as of right now as well, it's still higher than any other place around the world. Dubai always sits at 6 to 7% in net yield, and that's extremely healthy. That's higher than any interest rate that you can get from, let's say, a top economy right now in the world, such as in Europe or in the US or so on. It's a very good deal to receive as compared to London, Paris, or Singapore. And what you also on the platform, what we offer is all of our investments that or all the properties that we currently have and rented out are actually sitting at 6 to 7% in terms of net yield and back to the investor. And we are also currently have a campaign running, which is the upfront rental guarantee, which means that you don't have to wait until the end of the year to receive all your rental income. All the properties that we currently have on the platform actually will pay you rental income upfront. So as soon as the property is fully funded, will pay the rental income for the entire year for the first year upfront for you. This way you can benefit and utilize this investment to either reinvest in a new property or also to cash it out. And that's what I want to highlight, which is stuff that you can take in your control. One more time, repeating the same message. And obviously consistency is very important, and repeating the message makes it even more important that stuff that you can take in your control are the essential points right now. So things that you cannot take in your control are obviously things that you won't be able to make any amendments or changes on or affect or change the course of these actions. But however, you can be essentially the captain of your own boat and take control of your finances. So again, as a summary, invest gradually. That's dollar cost averaging. Make sure to diversify, so not put your eggs in one basket, and prioritize income generating products in times of uncertainty. And just maybe before jumping to the next slide, I think you guys have been seeing a lot of polls popping up in front of you. We'd love to take your feedback and answers on these polls as well. We'd love to interact with you and understand where you're sitting currently in terms of your investing mindset and also where you reside. And also we have a couple of other polls that are coming in as part of this presentation. But that's a new way for us also to interact with you guys, other than just the question that you ask.
Enjoy. I just wanted to stress one point before we move to the other slide. You mentioned, the upfront payment of the yield, and I think that's something that I really want to stress, because we at Pripco, we're trying to make real estate accessible to more people, right? So real estate is known for stability, capital appreciation, and yield providing. But we lower the barrier to entry by making it more accessible. You don't need to, have the price of a full apartment to invest. But I think, providing the full amount of the yield or this full 5% upfront is something that no other assets or no other, type of investment can provide, right?
That's correct. Yeah. So even if you want to invest in a, let's say, fixed deposit with a bank, you have to wait until the end of the maturity to receive that amount. And the case of real estate, let's assume, just remove the context of crypto blocks for now. If you own one property and the tenant is paying you in one check, you're collecting that amount upfront immediately. And that's in the concept. That's exactly what we're doing here right now. We're giving you that one check essentially upfront for you to benefit from it. And again, no other asset class, as you rightly mentioned, Damien, offer this benefit. And that's the beauty of real estate, because it's a double, let's say, it's double way to earn income. One is from the capital appreciation of any asset class, also has that, but also it's the dividend and rental income that generates out of it. So you're able to make money actually in two different methods.
Amazing.
Now, speaking of ways to make money, we'll love to introduce a new strategy actually to the platform, and we're very excited actually to launch this. And we've been talking to a lot of our investors recently over the past couple of weeks and understanding their sentiment about us launching a new strategy, and they're all very excited. So we're super excited to announce that we're launching Flip the Blocks on the 23rd of March, which is next Monday. And essentially, I will walk you through what is Flip the Blocks as a concept. So currently on the platform, we have ready residential properties, which you can invest in them as low as 2,000 dirhams and generate income out of them through the tenancy agreement that we have with the tenant, and generate it on a monthly basis, or through the campaign that we're offering upfront for our investors. Now, a new strategy which we're launching is actually acquiring a property that is in a very well established community in Dubai and very strong fundamentally, renovate it, and then utilize that renovation and upgrade and uplift the value of the property, and then sell it at a higher price, and then reward obviously the investors with a much higher ROI in a short period of time. And usually, the timelines that the life cycle essentially of the strategy is between 9 to 12 months. And the property that we're launching on the 23rd of March is a villa in Arabian Ranches. In Arabian Ranches, if I'm not mistaken, Sahil 2. It's a very strong community within Arabian Ranches, and has been obviously went up in capital appreciation over the year very strongly. It's a huge community specifically for family-oriented people, and obviously generating a lot of income out of this community, which is great to see. And we've obviously before launching this property, we took the sentiments of a lot of our investors, and they seem to be extremely happy with that specific community, and we're extremely happy also to launch this on the 23rd. Now, bearing that in mind, and also coming back to some of the previous point that I mentioned, this is not the only strategy that we have at Perpco. Flip the Blocks is the new strategy that we're announcing today. However, there's 3 strategies that we currently have on the platform that are readily available on the application right now. And number 1 is high yield properties, high returns, and balanced properties. And the difference between all of them is that for high yield properties, we're looking after properties that are generating usually a higher rental yield compared to other regions. It's usually the areas where the rental income is relatively, let's say, at a higher average rate than other areas, and the investment amount or the price of the property is relatively lower than also the rest of the areas. That's how we are able to generate a higher rental yield for these properties on so from a percentage perspective, you should expect anything between 6.3 and above percent. That's what's categorized as a high yield. Now, in terms of high return, these are properties that are located in new areas, up and coming areas within Dubai that have extreme potential of appreciation, and a lot like essentially new areas where people are going and residing, such as Dubai South, for example, and generating a lot of demand at the same time. And finally, balanced properties, which are part, let's say, of of areas in Dubai that have always shown consistency of growth and strong yield at the same time, such as Dubai Marina, Business Bay, and Downtown. These are prime, let's say, located units and properties, and always generating income over time. And finally, the latest property or latest strategy that we have, which is Flip the Blocks, that is generating income for on a shorter period of time, but utilizing the power of renovation for us to sell it at a higher price. And these are essentially the four strategies that we're announcing today, and readily available. At least the first three readily available on the platform as of now. And then next Monday, we're launching Flip the Blocks. So.
So a very timely question. I mean, I know it's time for the question, yes. But while we're on this slide, Anastasia is asking, is it only for the UAE residents or is it for any investor?
Yeah, that's a great question. And actually, Pripco Blocks is a platform that is allowed to onboard customers from all over the world. You don't need to be UAE resident to benefit from investing or own a piece of Dubai, essentially. As long as you go through the KYC process and the onboarding process, you are able and eligible to invest on Pripco Blocks.
Amazing. And one last question on Flip the Block. So all of those, investment strategy are great. What is the key advantage of Flip the Blocks? If we just want to summarize this whole table just in 1 minute.
Yeah, so the key advantage of Flip the Blocks is essentially earning or being able to invest in a property, being able to renovate it and earn that income out of this property in a shorter period of time, as compared to the different strategies where it's an investment term of around 5 years and earning that income on a steady level basis until the investment term is done. So that's the main difference between the first three, let's say, investment strategies and Flip the Blocks.
Great, thank you.
Amazing. So with that, if you have, again, any questions, please feel free to drop them in the Q&A section. We have a couple that we would love to answer right now. So the first question is, since the times are a bit uncertain right now, and if there's something happen essentially to the property, how will it affect the investment on Pripco? And that's a very interesting question and very important for us to address. A couple of things to note here. Number one, all the long-term properties that we currently have on the platform that are funded and went through the entire cycle of the transfer are currently rented, which means that you're earning your dividend on them currently. Every single property that we have, even before it being rented, as soon as the property is fully transferred in the, let's say, the custody of Pripco, we insure every single one of these properties. And this is essential and very key. And we've been doing that since definitely day one. And that allows us to be at the peace of mind that if anything happens to the property, whether it's during that specific time period or, I don't know, there was a leak in the property, there's damage to it, I don't know, something caught fire, or there is a flood, and whatever scenario that might happen, there is an insurance that covers the property from damages and fire and death. And we'll be able to recover the cost of that, make the repairs, and then continue the investment from there. All right.
Great. Follow-up question from Anastasia. Will the Flip the Blocks property be rented after?
No. So the strategy is for us to do the renovation and then just find a seller and sell it directly after the renovation is done. Actually, what we do is the renovation period is for around 6 months. However, we start looking for the seller about month 4. So that will allow us roughly around 2 to 3 months to find a seller and then being able to exit the property as fast as possible.
Great. I see a question that is pretty fundamental, so I will make it jump to the beginning of the line, which is how can investment be made? What platform should we use?
Okay, so how the investment can be made, what platform should be used? It's very straightforward. So if you're looking to invest in Dubai's real estate specifically, Pripco Blocks is that platform for you. You can access it through your Google Play or App Store. It's available on these stores anywhere in the world. download the application, go through the onboarding process. It literally takes a couple of minutes to do so, and then you can transfer funds into your wallet or directly into the property using a debit card or a bank transfer. It's extremely easy to invest. Just think of it as checking out from your let's say purchase on Amazon, as quick as one button, and you're invested in a property. Damien, maybe a question for you.
Tell me.
So obviously we've talked about a lot of these strategies right now, but one of the anonymous question is, what is a good split if I had 10K between real estate and other assets?
That's a great question. And that's a great question because that's one that I will not answer because obviously depend on your own risk profile, right? Your, risk aversion or risk appetence only depends on you, and every type of asset class, every type of investment carries a different risk reward profile. People who are, more risk averse will want to probably over index on things that are very safe, like real estate, money market funds, things that are very predictable and where the principal is not always completely guaranteed, but at least it's very protected. So if you have a more cautious profile, probably 80% of your investment into something that is more safe, that's good, and then 20% in a higher risk, higher reward, just because at the end of the day, that's also what investment is about. And then you can, probably afford a 20% drop if things go wrong. Obviously, some people are going to be a lot more risk takers and have, the opposite split, more or less. So we can't really answer this question for you, but I think at the moment when times are uncertain, it's better to do the things that are the most certain. So the strategies that Joe went through, the three of them actually are worth, are valid with any kind of assets, except some assets do not provide a yield, right? So at the moment where, you don't exactly know what's going to happen with your principal, it's better to be focusing on a yield and have something that kind of hedges or at least, caps the depreciation on your capital. So I would stay over-index on real estate and safer options for now. And then, progressively, as you grow more confident or as you see that the market evolves, try to reallocate this.
Absolutely. And maybe if I want to add just on top of it quickly, I think you've highlighted a very good point, which is obviously the risk level and risk strategy per investor. And that's how we'll determine essentially how you can allocate your investment depending on what bucket. One thing that also I can add on top of it, if you're ever planning on investing or so on, it's very important to take control or to think about how you can essentially allocate some of the income that you're receiving into an emergency fund or a safety net, which is extremely important before even starting to invest. And maybe we skipped right through it to investing, but maybe if we take a step back, financial safety net is extremely important for you to have. And that will determine essentially how you can later on split that 10K eventually.
Absolutely. I see two questions that I just want to tackle now because there are questions that are not really concerning what we mentioned, which are about off-plan properties, developers, what is going to happen to all of this. And to Alexander and Gulnaz, I want to say we're not developers, so we cannot either comment or commit on anything. What we can tell you is what we've said before. The market in Dubai is extremely reliant. Developers and the market overall come from a position of strength that was exceptional, at the end of 2025 and still in the beginning of 2026, which means that everything will probably be on schedule. We cannot commit to anything, of course. I will enjoin you to ask the questions to the people that are directly concerned, but I really wouldn't be worried in terms of off-plan investment for two reasons. Once again, position of strength before everything happened, and second, the regulations and the rules and the laws in Dubai for protection of those investments have grown a lot and are really materially different and in a much better place today than they were a decade ago. So I wouldn't worry at all. Now, of course, only the people who you contracted with can give you answers that they can commit to. And while we are on regulation and safety, Joseph, somebody asked, is this investment secured? Is it regulated by the UAE government or any regulatory body?
Yeah, of course. So Pripco Blocks is regulated by the DFSA, which is the Dubai Financial Service Authority here in the DIFC. And actually, the DFSA is the largest financial regulator in the region. It's been there also for quite some time and very robust. And also from an investment perspective, all the investments that are invested obviously through Pripco Blocks are secured in a client money account that is completely separate from the company's corporate accounts, which means that at any point in time, if the company itself ceases to exist for whatever reason, the client assets are always protected. And again, that's as per regulation, and no company is allowed to operate in the country if these regulations are not taken or applied. And then finally, every single property itself is governed within an SPV structure that is also registered in the DIFC. And then if again the company ceases to exist, that SPV is going to be managed by an administrator or trustee. So your investment is safe, definitely, and regulated as per UAE laws.
Great. And while we're on technicalities and access, someone is asking if the resident is sponsored by a spouse, can they invest or the person must be employed? And the answer is very simple. It's open to anyone. And so if you are in the UAE, just having an Emirates ID is enough to have access to the KYC and to the platform. Is that correct, Joe?
Absolutely. So basically, if you only need an Emirates ID and passport, obviously, to invest on the platform, and a proof of address, even if the proof of address is not under your name, you can always utilize the proof of address of the person which you live with, whether it's your spouse or your partner or let's say a roommate or whatever, or even if it's a company shared accommodation. That's also can be utilized. So these are, let's say, the three main documents that should be uploaded on the platform.
Great. Two things that are concerning tokenization, and I think it's good to tackle them together. The first one is, what's the difference between blocks and mints? And the second question is, when will tokenization be open for global investors?
So the difference between Blocks and Mint is, first of all, Blocks is a platform that allows you to invest in Dubai's real estate and give you own or access to Dubai's real estate as low as 2,000 dirhams, regulated by the DFSA. And every single property is placed in an SPV that allows you, or essentially every single investor becomes an investor in that SPV that owns the property. Now, Mint is the evolution of that particular model. And what we've built together with the land department and Vara is a platform that allows to access ownership in a property directly without the SPV structure, and giving you ownership directly from the land department, and allows you essentially to trade that token at any point in time. Now, I want to highlight that the Pripco Mint is a pilot program that is led by the land department, a very successful pilot program led by the land department and Vara. But it is still a pilot, which means that we are running it right now to make the framework more robust, make it more accessible to multiple players to be part of the ecosystem, and then building the future of real estate, building the future of accessibility and ownership of real estate. I hope I was able to kind of give the differences between both platforms. But most importantly, both platforms are giving you access to an asset class that is traditionally inaccessible by retail investors. And when is it going to be accessible to global investors? It's something that the land department is working very hard to do that, and hopefully by the end of this year we can look at opening up to other or global investors essentially.
Great. I'm going back up to the list of questions. There's a few I've left on the side. Okay, how does our pricing work?
Sure. I'm happy to take that as well. So essentially, Pripco makes revenue, or the pricing essentially for you to invest on Pripco goes through into three different buckets. Number one is the entry fee. So every single investment that you make, we charge a 1% entry fee on it. That's in the case of Pripco Blocks. And then there is a management fee as well, which is 0.5% on an annual basis, and that's taken out of the rent that we receive from the tenant. So what you get out of dividend is the net of all the fees that we collect, whether it's the our fee, our management fee, or the, let's say, the service charges that we pay for the developer or the building, or for the maintenance, and so on and so forth. And at the end, if you're exiting, there's a 2.5% exit fee that is charged at the point of exit as well. So these are essentially the three categories or three buckets of fees that we have.
Very great. Okay, I have a few questions about, the return rates. What happens if the apartment is not rented? How do the return rates compare between the 4 investment strategy that you've mentioned in the end? So let's just like run a little crash course on all of this to answer these questions.
Sure. So the approximate rate of return of, let's say, the 3 first strategy that we're looking at is, from a rental perspective, is anywhere between 6 to 7%, 6.5% in terms of net yield. And in terms of ROI, it's 10.5 or maybe 10% plus in terms of ROI. And that means the capital appreciation of the property plus the rental income that you're receiving as well on an annual basis.
Annualized,
yeah, annualized. So the other or the new strategy which we launched, which is Flip the Blocks, actually on the annualized return, or what you should be expecting, is anything north of 15%. That is because what we're trying to do is to maximize the value of that property in a shorter period of time, and to sell it, obviously, being an upgraded. So again, different strategies. It doesn't mean that you need to be exposed to one particular one. Our recommendation is to have a diversification, let's say, methodology or strategy across all of these strategies, and that gives you the best exposure essentially to Dubai's real estate.
And then to follow up on this one, what happens if the apartment is not rented?
So let's take it in twofold. Let's say that property that we have was around 3 years ago. As part of the real estate cycle, some tenants might be leaving the property, and it's our, let's say, mission and duty to make sure that the property is rented as soon as possible. That's why, as part of the contract with the tenant, we start looking for a new tenant 2 months before they leave, so there is that grace period, and then usually we're able to find a tenant immediately. Now, investing in real estate comes with risks, and I need to also mention that, and that's very important to mention the risk disclosures, which means that there might be few opportunities or few investments or property that might not be rented for a period of time. But that's part of the real estate cycle. But it is our mission and duty to make sure that actually these investments are rented, and the occupancy rate is as high as possible. And currently speaking, our occupancy rate is roughly around 96 to 97%. Now, the second part that I want to mention is actually about that upfront rental guarantee that we're mentioning to you. All the investments that are currently live on the platform have an upfront rental guarantee, which means that you don't have to wait for someone to come and rent the property. You will receive your first or the first year rental income upfront, and will then manage the rental with the property management team and the tenant later on as we go through the investment journey.
Yeah, so to summarize, we are making real estate more accessible, faster, better. We are making magic. We do some things like upfront yield paid after 2 months, but we can then do miracles, right? There are still some of the intrinsic characteristics of real estate that are still here. And obviously, since we are very close to the management of our properties and we ensure a very high occupancy rate, this is a small risk, but it's not a risk that is zero, and we have to be clear on this.
Okay.
All right, more questions. I think this one is for Flip the Blocks. What happens if the property doesn't get sold?
Sorry, where is the question?
Second question.
Can you repeat it? Sorry, can you repeat it?
What happened, and I assume it's for the Flip the Blocks property, what happens if the property doesn't get sold?
Okay. So So let me tell you just essentially the timeline of what we follow when it comes to flip the blocks, if we're talking about that specific example, and then we'll come back to it at the end. Once we fund the property, usually it takes around 6 to 9 months for us to renovate. In the particular case of the property that we're launching on Monday, it's a renovation period of 6 months, and we're keeping a buffer of 3 months to sell the property. So in total, a holding period of 9 months. What we do is that we start the renovation process, and within the third to fourth month, this is where let's say the shape of the renovation starts to take place and more clear, and it's much easier for us to get interest on the property from that point in time. So at month 4, we start looking for buyers essentially on that property, and to commit to let's say a 5 month period to find a buyer. Within Pripco, we have a network of a lot of real estate agents and a lot of let's say professionals within the real estate market that is enabling us to have access to buyers, whether here locally in the country or internationally outside of the Emirate, to invest in Dubai's real estate and acquire properties. So we're very confident of being able to sell the property within the timeframes that we share with you, specifically on the fact that we have a very large network of real estate agents and brokers that being able to be with us and support us finding the right buyer for that particular property. And also maybe to highlight something is that for this particular unit, it is a villa that, and mostly obviously in the community, that is very family oriented, and villas and townhouses in Dubai have been or the transaction of essentially of this type of property has been increasing significantly year on year because of the demand of it. A lot of families are actually relocating here to the country to establish themselves in the country, and Arabian Ranches specifically is a very strong community for families to live in. If you want to add something to that, Damian, please feel free.
No, I mean, we're doing everything to maximize the probability that everything goes well. Obviously, that's our job. Buying a great property in a great neighborhood at a great price, renovating it really well, and obviously trying to look for buyers as soon as possible. That's part of the whole life cycle of fix and flip. And we're doing on top of all of this, and we really believe that the demand in this neighborhood will not drop. There was an interesting question that we've had a lot over the past few days. Are we going to list distressed deals? Yeah, I mean, distress, it's a word that's used a lot lately. Once again, we see that the times are uncertain. Some people are close to panicking. I don't think anybody is really panicking yet. So the distress deal is not really the right terms, but we do obviously look for bargains. That's what we do all the time, and we find some. Obviously, we are connected to a lot of the real estate network here. We are finding the best deals for our customers. So we, without making too much of a precise announcement, we will be listing in the coming weeks properties that are at a fair discount versus the market. Whether it's a distressed deal or not, I think it's a matter of vocabulary. But yes, we will be listing properties very soon that are below market to make sure that, as Joseph mentioned, you can start dollar cost averaging as soon as next week, and making sure that you're not leaving your capital on the side during those uncertain times.
As soon as today.
As soon as today. Let's go.
Yeah. With the current properties that we have. Amazing. There is maybe I want to highlight something on that particular point is, and you mentioned that clearly, Damian, that we work very hard to negotiate the deals that we have on the platform, and then hopefully next week we're going to be launching something very, very, very cool, as you mentioned. But then the current properties also that are listed on the platform are well negotiated for you to have that initial kick of capital appreciation immediately, which you can benefit from.
And then I see we're a little bit above time, but let's take a last question, because it's an important question on how the things work with blocks. is there a chance to liquidate my capital before the exit in case an investor wants their cash back?
Yeah. So essentially, there's three ways to exit your investment on Probeco Blocks. One is the investment term, that is for 5 years. This is the typical investment term that we have on the platform. After the 5th year, we issue a vote where people can essentially decide on what to do with the property, keep it or sell it. Number two, if we've reached a capital appreciation point of 30%, that will also automatically invoke a vote or trigger a vote for all the investors. And that can happen at any point in time, whether today, tomorrow, or after 5 years. It's the same thing. And number three, every 6 months after a 1-year lock-in period, we have an exit window that allows customers to list their blocks on the platform and for other investors to buy these blocks from the sellers, all within the app. So it allows investors to essentially list these blocks at the current valuation that we're listing. Obviously, we utilize an independent third-party evaluator, but they also have the ability to put some discount on it in case they want to liquidate much faster at the same time. And the next exit window that we have is going to be in June. Please stay tuned. We're going to announce that obviously when the time comes, but it usually happens every June and every December.
Great. Okay, last questions time, because then we need to jump off. Do we have any properties that are currently nearing full funding?
Yeah, we have actually 2 properties currently that are nearing full funding, and we've listed them a couple of, so I think about 2 weeks ago. One is in Botanica, which is now at 71%, and another one, I think that's in Dubai Marina, and another property in JVC that's nearing around 55%. So that's above, let's say, the middle. And these properties, usually when they reach 50% and more, they tend to fund at a faster rate. So that the opportunity is right now. And since we talked about investing today and systematically, right now is your opportunity. Today, again, is the youngest that you can ever be.
Amazing. We'll answer in written form to all the questions that haven't been answered yet. Thanks a lot for joining. It was really interesting to see all the interaction and all the engagement from the audience. Thanks a lot for listening to us. Any last word, Joe?
No, thank you so much. Obviously, please stay safe, everyone residing here in the UAE. And again, take more control on your own finances and reduce the noise as much as possible. Thank you.
Thanks, everyone.